All right, what's going on, guys? So we're going to be doing a scan that is leading into the January OPEX. I remain on a higher time frame perspective, a little bit bearish within tech, right? It's not one of those things where I would be shorting at non-discounted ranges as far as puts go. That's why I think it's very important to understand your discounted ranges and your LPS-wise, because those are the points in which your risk to reward is going to be the best, right? And obviously for the other side, we would be looking at LPSs on potential accumulations, right? So there's a few long side focuses that I think are in their stages of LPSs. And then I think there's some short side focuses that are in their stages of LPS-wise. Obviously, I've been talking about the NVIDIA distribution, and we got that UTAD look leading right into that Jensen speech, where you have to obviously envision that a lot of people are buying into the hype, buying into the highs, and not really understanding or valuing any true fair value on a name like this. Obviously, throughout most of last year, we had a lot of liquidity injections and we had a lot of really big outperformers in the tech space. And obviously, once we get into the inauguration as well as the January chain that's expiring this week, that's a lot of things that can kind of catalyze a distribution leading into basically the final stages before the mark down from the upper ranges of the extremes on a chart, right? And we saw that through the break and the follow through attempts that were trying to happen leading into the report on NVIDIA, right? And then we built out some sort of head and shoulders look on the daily. And this was right into the last seasonal area of flows on the undercut of this 132 liquidity. That 132 liquidity obviously led to a sweep, a failure to base beneath, a fill of the 128 gap that was hidden all the way back here. That's why I said my target's 128. We have the UT. Now we're going to get a UTAD. Now we have the UTAD right off the Jensen speech, right? So this is very important to start monitoring the bids, looking at the bid and seeing how weak the bid is, how low the volume is on a pop back up into where we could obviously find structure developing for the sell side. We could obviously fail the 140.76 area, and obviously failing that would lead to a lot lower, or we could pop a little bit higher into maybe something that is around this gap that was obviously capitulated through, and then we could start finding lower highs off of that gap, right? We actually had the same general setup over here with the parabolic short model that then led into a retracement into the gap on a weak bid, lower high. Potential right here, and then that's what obviously sold us all the way back down into the gaps that were remaining beneath us. There was a little tiny hidden one here at 106.50, but the much more important one that makes sense in terms of obviously looking at a constructive fill for the trend to continue would be this one down here, right? So that same risk to reward that is being portrayed over here, I feel like is also kind of portrayed over here in the chart. So NVIDIA is going to be a short side focus for me. What I do think is that we could get an early week pop. If we do get a drop and then we get an NVOG, obviously I would be looking at a SPY trade. So that's all subject to change. I haven't even checked futures yet. Does anybody know what the futures are doing that are in here? Are futures red, green, flat? What's going on with those? Actually, I could just check here real quick. I don't ever check futures on my PC. Okay, it's like flat. All right. Okay, yeah, flat futures. We have a 3 lower low potential that's actually happening on the S&P chart. So what I mean by that, guys, is overall I'm bearish, right? This is just not a chart you should really be too bullish on. But at the same time, this is also not a chart where you should be shorting the whole leading into a bear gap closure. This is the election gap, right? So obviously, leading into a fill of that, followed by a pop, this would be a 3 lower low technically on like your 1 hour or your 4 hour, where you're getting each and every new low that's being bid actually into a gap trap, right? So if we could fill the gap or get some sort of gap trap one more time, then I would be willing to take an SPX trade. I've been trading SPX here and there just off of the lower ranges being long, the upper ranges and the lower highs being short, right? It's just a range trading type of scenario that we have here, but we do have enough risk to reward, obviously, off of like, the upper extremes being 600, the lower extremes being 580s, right? So that's 20 deltas on either direction that you could catch with a swing trade, right? So it's not necessarily the worst of the worst in terms of range trading, right? We have a decent range to trade with here. And if you flip this chart upside down, it actually looks really, really, really bullish, meaning on the regular chart, it looks bearish. But at the same time, like I said, the risk to reward is not optimal down here to really remain short. I mean, maybe if we could get some sort of break beneath and then a hold for like an LPSY potential on a lower high, that's kind of where sellers are getting a little bit more aggressive for its final lower high, then maybe we could get that, and then we could take some sort of target to target trade off of like a lower high in this range after we get slippage beneath, and then we could start targeting down into 561.50 or 565, and there's also liquidity remaining above that level as well. This is a breakout level, as you guys can see from here at 565 into a double top. The spread tightened, it broke, and then it got really no true strong constructive retest. And we have two little areas of liquidity that both need to be taken. One here at 568, one here at 565, and then a gap as well beneath. So there's a really nice confluence that makes sense in terms of the S&P pulling back into the 560s and to the mid to low 560s. So that's one thing that I really do want to emphasize here as we go and move forward into this week. I do think a broader market correction is still definitely on the table with how the S&P's character looks in terms of price and volume. We're getting really heavy volume at the top of the trends, right? We're getting obviously this head and shoulders look where lower highs are starting to formulate on the daily chart, right? But you also got to keep in mind, guys, that doesn't necessarily mean that that's your final lower high, right? If you guys go to the weekly chart, we could pop up actually for a new high, and then the distribution could technically play out a little bit later. So you always want to have a realistic expectation in terms of, okay, yeah, everything looks really bearish, and you want to kind of have a biased directional read for sure, but you also want to really focus on your risk to reward when you're entering into these trades, because they could fake you out, right? I mean, there's so many people that are probably leaning bearish towards this head and shoulders neckline. This could technically fake people out, make one more new high, get its final weekly UTAD, then get an LPSY and maybe mark down midway throughout the year, right? We don't necessarily know. So that's why you never want to hold too much of a bias or get too much FOMO. You want to really stay calm, cool, collected, and then we'll obviously start talking about the long side trades that are showing relative strength actually on a day of pure weakness within the general market, right? Minus 1.5% on both the NASDAQ and the S&P, but you also have a lot of your green names and longs that I've actually been talking about for quite some time. I've been talking about this gap that needed to claim progress. Buyers are holding their progress, and this is technically one big daily wick that we can now start thinking about playing off of. I'm actually long on BA, but if we could get some follow through and continuation above the daily EMAs and get some sort of kicker candle that starts igniting this thing above 174, which is also these 4 days of resistance that are sitting here as well, then that could be a really nice trade opportunity. And there's also a really nice confluence that also sits right here off of this little gap. This is technically a gap from here to here of minus 4% on the underlying, which was where we got our first initial footprint of accumulation that was reaccumulation that was trying to build out with a intraday recovery session that went up and filled a little bit of the gap, but not all of the gap. And then it got a lower high, and now it's pressing a little bit lower into the bottom of the gap. And now we're looking at just some sort of weekly / daily high or low. I really like this one, like I said, above 174, and I could size into some shorter expirations above 174, and then I would obviously be looking for like 179, 178, and eventually 181. And then above 181, this thing obviously has so much room all the way back up into like the 190s, low 190s, even high 190s, or even 200 or 198, right? So the risk to reward is totally there. Even for some further dated, I think that one's going to remain to do really, really, really well. So with Oxy, I've been preaching that this should be a long side trade and a really nice long side vehicle for uh, basically all of December. I was looking at the weekly sell climax, as you guys remember, after we lost the lower extremes of this previous range, right? And that's totally okay when you're losing the lower extremes and the support of the previous range, right? Because beneath that, that's whenever people were selling out and bailing, while other people were accumulating those sells and looking at where this thing has a little bit more value leading up into a window where energy longs are quite vulnerable, right? So we actually have a pretty neutral spread here on the daily candle. However, we have a daily gap fill above us. We never tested into the gap fill yet, and we're getting rejection points off of this daily resistance range, right? So we have a big support that was starting the preliminary accumulation into a window where obviously energy is a little bit more favorable of a long side trade. And once we got our 3 lower lows sell climax, this being the first low, and obviously a pop with some big volume behind it, a secondary low, neutral spread, but if you guys go into the daily chart, it's a pretty nasty hammer with a lot of volume on it. That was through the earnings, and we created a lot of support off of 50 that was obviously failing to press us up further above these previous resistances into the gaps and then fill those out. So we pulled lower, right? And we pulled lower, but the context of where we pulled lower to was just this big weekly imbalance candle that was on February 28th of 2022, right? So we got our secondary low that was obviously accumulated in a little way here, and then we got one more low, and that low is a reversal bar and a lot of volume, right? So now we're popping back higher. This kind of reminds me of the BA schematic. Whenever we had our terminal shakeout down here, we popped back higher. We had a daily resistance that was sitting right around here, right? And then the range kind of coiled. We got the expansion above that with a gap fill to the upside. We filled it with ease, and now we're obviously looking to roll profits. This is kind of the stage that we're at within Oxy, where we have a gap fill to the upside. We want to see the range coiling and a path of least resistance being shown off of 52 range. Maybe if it wants to pull back into 50, I'll monitor the $50 area. But just this general area should start really, really, really dwindling down in terms of looking at the sell side strength, looking at the volume, looking at the daily trading action, and being able to really conclude to that we have a path of least resistance, right? So we have a 54 gap that's still in mind here. Obviously, if you guys are EMA guys, there's nothing wrong with that. I'm not a big EMA guy, but the EMAs would suggest that we can get some sort of pullback into 50 maybe, but if we don't, that's totally okay. I could also see this one going absolutely vertical after 1-2 days of digestion off of this resistance, and that would obviously lead to a 54 gap fill target, right? And at that target, that'd be a really nice trade with really good risk to reward. So that's Oxy. Really nice chart there. We'll go over to DKNG now. I talked about this one in the earlier year. In the earlier part of the year is a distribution over here on this head and shoulders with liquidation from the highs and then lower highs afterwards, right, with gap fill targets to the downside here and here, right, and that was the completed distribution on the August 5th low. As you guys can see throughout most of the market, the August 5th low, the August 5th trading day was a very critical trading day for a lot of the market, right? We had a big weekly trap bar throughout that level at 448.64 from a red to then green closure that trapped out a lot of people, and then we got lower highs afterwards. DKNG is just one of those ones where it's lagging a little bit behind, and throughout most of my long side focuses in this quarter, I traded with a lot of the names that were lagging behind and just developing structure off of those completed distributions through the August 5th candle, the August 5th candle being the reversal bar and just the overall market, right? So whenever we think about this, we have to think about this in a way of a previous market maker sell model and do now a market maker buy model. We have volume patterns, as you guys could see, after the distribution was completed, which was August 5th. It was down here at $28. We filled the gap, and then we reclaimed the lower extremes of where the previous support was in that distribution, being around here, which was also a daily gap fill. And then we started to get lower highs on top of those previous lower extremes of the distribution, or I'm sorry, higher lows. So that higher low was obviously a pop above one more lower high on your daily/weekly. And then what happened was it pulled back down on low volume and then got another really nice big weekly candle with a lot of volume on it relative to the rest of the range. This was the biggest weekly volume that we've actually had ever since February of 2024, right? And it had a really nice spread to it. So we could conclude that this was a previous distribution. It completed down here. It ripped back higher, harmonic volume pullback, and then we get another really nice volume pop from the buy side on a plus 12% week. Now, we popped back up to the upper extremes. We got the news. The news was not enough fuel to obviously push it higher. Now we're just trickling our way lower with buyers reappearing as we push down into the bottom of the gap, right? We have a gap down here into 36.50. We have that gap that is actually started at 37.37. And what happened was we filled the gap. And then once we filled that gap, we got a really nice pop, and now we're getting really nice relative strength. And if you guys look at the weekly chart, this could just be your simple secondary higher low, which would kind of act as like some sort of LPS, right? The last point of support, where obviously we could find that to be our last higher low, our last constructive strong higher low that's being put in before we see potential expansion back to the upside for the upper extremes again, right? So I wouldn't hold too much. I would hold a lot of potential to this one potentially being able to move back up to this 44.62 spot. Obviously, the weekly candle close was failing at that spot previously, and then we did get a sell-off afterwards. However, the volume patterns on the weekly remain bullish. We never really had any true strong seller, and obviously throughout those holiday weeks, that's a point in which volume is going to look a little bit misleading just because there's low volume everywhere. But I really like the defense of the gap fill, and then the relative strength that we actually had off of the weekly candle close, which is Friday session. And on Friday session, you guys could see the relative strength for yourself, right? This is an ARKK name. ARKK was minus 2.5%. The NASDAQ and SPY were both minus 1.5%, while this thing was up 3% on the day, right? I'm still long on this one, but I want to see if this can be defended, right? I want to see if this $39 area can be defended. That's also kind of like your previous hourly resistance. If those areas can be obviously defended and we could start pivoting off of those ranges, I could obviously trade this one again. So that would be DKNG. I really like this one. It was the strongest name actually on Friday to end off the week. So yeah. LRCX, this one's not quite ready yet, but I still am really monitoring this one off of the weekly and the daily. So with the weekly, this is just one big massive retest, and then a 1, a 2, a 3, lower low accumulation on our weekly chart, right? And it's all just off of a retest with so much internal range resistance being built off of 79.60, right? And with internal range resistances, what do I talk about? Well, if we have an internal range resistance and it's tested consecutively, test by test by test, every single day, every single week, then eventually what's going to happen is with the bottom areas of the chart looking like a 3 or 4 lower low accumulation, and the top of the chart being a flat top resistance that's been tested 4, 5, 6, 7 times, then we could start finally seeing higher lows eventually. Leading back up into the resistance, and then the resistance range obviously fizzles out a little bit and sellers can't really push it off of the resistance anymore, so then it pops its way higher. And with the targets that we have in mind for this thing to potentially move its way higher are off of 86, 32, and then we have a gap fill target all the way up into 89.51 that extends all the way up into 92, right? So we know the risk to reward is there. What I'm more and less looking for would be obviously a hold of some previous gaps, right? We have a big time gap that's right here, okay? So if we could find some sort of higher low within this area, if you want to turn on the EMAs, you can. They're actually sitting right off of the Friday candle itself. If you guys want to look for some sort of higher low off of this area, you would like to see a pivot off of this range, right? Where the gap this was a gap that was created through the MU sympathy. And this is also where we would just simply find a discounted high or low from, right? Here's your low, here's your high. Your discount's actually being tested right now. So I want to see how LRCX reacts to this range as well as MU. These are two semiconductor long side opportunities where we're seeing some gross looks in NVIDIA, right? And don't get me wrong, those are very gross, and I don't know if I really want to touch these names just because we have very disgusting looks in most of semis. However, if you look at MU and you look at LRCX, they're at very critical areas of the chart where they're performing relatively well in comparison to the rest of the semiconductor names, right? So these were the lower extremes of what would be technically, this was not a long side trade. This was never a long side trade, right? It was for a little bit of time buying in off the lower extremes, right? And we had gap fill targets to the upside. We had externals all the way up into 115, but this was more of an earnings run up trade than it was such a long side. Like it wasn't a long side trade. It was not. It was never a long side trade. It was maybe into the report before it got hammered, but there was also gaps to the downside. That's why I never really touched MU with so much size or through the report or anything like that. I knew about the chart, I knew about the weekly, I knew about the daily, I knew about all the gaps, I knew about all that kind of stuff, but there was a lot of crowded so many people were talking about this one, and then it just failed into the gaps. We swept these daily relative equal lows, and then we got news of something about news. I don't care about the news, but basically what I'm looking at is this big time pop, right? And then we get kind of this thing to start fizzling out off of the top of the gap fill, which was the earnings gap. So this is your earnings gap right here. These are the lower, this is a previous support. This is also a big time level on your daily and your weekly, because if you go left, I mean, this is a resistance for years, just about a year, right? So a little less, well, obviously from where it was created into obviously the breakout of that area, that was over 1,000 days, right? So that's a very important area in terms of looking at the looking at where we're at on the chart, right? And we're actually getting some sort of like flag off of that area, right? We got the fill of the gap. We didn't get a crazy amount of a seller off of the top of the gap. So I think I'm going to wait for this one just because NVIDIA is disgusting, just because a lot of the names are disgusting. This one is kind of clean, but it's really not that clean. I would like to see the top of the gap being claimed, and then maybe like I could size in with some into the strength up here, and then that would lead me to believe that this can start targeting the external. But the chart isn't that, like, it's not that good. It's really not. Like if you guys go to the weekly, it's okay, but like it's not that good. Like it's, I don't know. Could this fizzle out and could it fill the entirety of the gap? It totally could. Um I do like the fact that we have an external. I do like the fact that if you go into the daily chart, we're holding the previous support. This is also a very critical level. Does this gap mean everything in the world to me? No, it doesn't. But at the same time, I don't really want to be buying and front running this thing to be some sort of long side trade whenever most of semis don't really look too good. That's just not my style. So that's that's what I'm looking at for MU. Maybe I could size into this gap down here, right? That's the other only thing that I have in terms of ideas for MU, but I would rather see the strength off the gap and then take a smaller time frame higher low from the strength on the gap. So we have the strength shown in the gap, and then I would obviously look for like a reclaim of this level. I don't really want to trade this one unless it's above 97. That's my point. I will monitor the gap. And then there's nothing wrong with taking a trade in this bull gap and finding a little bit of leeway on your P&L for the position to obviously work in a risk-free way. Uh, you know, you catch a 25, 30% win, and then you take it overnight, and then you start looking for a target-to-target trade on a swing. If we could catch like a red to green intraday move on this one, that'd be nice. But like, I just think that's a little bit dangerous rather than waiting for more confirmation, to be honest. Um, So that's MU. There's not really anything else I have to say about semiconductors. I'm eventually going to be trading NVIDIA, but this name still doesn't look good. Um, a lot of people are really trying to time the bottom on this one. I personally find you to be not the sharpest knife in the drawer if you're trying to do that. Um, it doesn't look good. There's no signs of this looking good, and we have a report in the beginning of February. So if this thing fizzles out into February, and then obviously it's the direction is dictated through that report, it makes total sense, and I'd wait for that. Disney's another trade that I have. Obviously, this is a long side focus. We just actually got a sweep of the earnings candle low, technically right here, right? This is technically the top of the peg and the top of the gap at where it opened. And this is the earnings candle low itself, right? So basically what I would be looking here for, guys, is on the weekly chart. It's not the prettiest looking weekly candle by any means, but there's so many confluences in terms of buyers wanting to hold this general area, right? Um, wasn't the weakest name in the world yesterday, or Friday, wasn't the strongest name in the world, but it wasn't anything that was too bad. I'll actually move this thing a little bit lower. So with Disney, what I'm looking at would be some sort of buyer appearing into the bottom of this bear gap, as well as basically just a gap sweep. I would like to only trade this thing if it's above 108.40. And if we could get some strength and momentum that pushes us over 110, which is also an EMA flip on the daily chart, I would obviously look at 110 being controlled and maintained from buyers and use that as my risk level or use that as my trailing if I start to execute this near that earnings candle. It's basically just a high tight flag on the weekly, and could it digest or pull back a little bit more? It totally could. We have a 126 external on this potential accumulation all the way up here on whatever August of 2022, and then we have a lot of liquidity built that is underneath that low, right? So we could pull up all the way up into 124, maybe sweep 126.50 and then go lower if it wants to redistribute. But the volume patterns down here in this overall range, the peg, everything about this thing, the fill of the gap, and then really no true seller anywhere off of this range of price action if you look at the volume on the peg itself, right? Everything about this chart just really tells me to try and trade this thing long. So I'm going to be looking at this one in its strength in comparison to the rest of the market and see if it's strong relative to the rest of the market. Snow is another peg watch that I have here potentially. If you guys look at the weekly chart, it's basically the same structure on the high tight flag, just as Disney was on your weekly chart. There's really no clear risk level that I could think of in my mind other than basically if we could get above 168, and if we can't get above 168, or if we do decide to trade this one, I want to get above 168, but I also want to use my trailing somewhere towards the earnings candle, right? This is where we had a previous support. We had an undercut from that 1, 2, 3, 4, 5, 6 days of daily support, followed by a rip. That rip now trying to be sold with a lower high, and now we're trying to move the bid up a little higher and catch a higher low. So there's a lot of decisions that are waiting to be made here with Snow is the best way that I can put that, and as well as the sympathy to that name is also D-Dog. This was a long side trade that I had that was really nice throughout November on that breakout. Really nice trade, and now it's basically just pulling back on minimal volume into one big retest. I feel like this one is kind of that under the radar one, under the hood type of one, that like everyone's so fixated on like the big boy in the basket, while the little one is kind of just getting really nice retests, and we have a gap fill all the way down in the 135.45. So I'm going to be watching both of these kind of together as a little basket, and seeing what they could do. Obviously, I'll size into both and see what they can. Obviously, like we have a weekly. These are more based off the weekly chart, right? So if we could get just a decent weekly candle, then I'll be pretty happy. Um, I would like to get the 135.50 gap, but this is also just one big retest. So do we have to get that? No, we don't. Could we? Yes, we could. But I don't know. We'll see because there's really easy risk levels here. I mean, we have these gaps to risk off of. We also kind of have, if you guys take a look, like above 142, that you could get a little bit more confirmation over the 142 area as well, right? Doesn't have to be a front ran trade where you're just sizing into a retest with no signal. You could find the pop and then start going into your smaller time frames, finding smaller time frame pullbacks on your hourly chart, and obviously taking it the trade based off of that, right? So those are the names that I really like. Aside from that, NVIDIA, we talked about the LPSY. If you go over into Apple, we also have another LPSY where I think this thing could get a pop, but if it doesn't and it gets slippage beneath this level, that's also not very good. I don't want to be the guy shorting the whole into a retest, right? But if we could get a pop that's a weak lower high, I think I'm going to short this one again. It's a really nice distribution. I've been calling this one actually ever since this breakout and all these ATR extensions were happening. If you guys take a look at your daily EMAs, I mean, could this one see some reversion back to the upside? It totally could. Do I think that this could be in a broader correction from the weekly perspective? If it gets slippage beneath that level, it looks terrible. Or if we get a really weak bid off of that level, it doesn't look good. So I'll be preparing to obviously re-short this one. This one and NVIDIA were both of my short side vehicles that I've been eyeing up throughout most of the tech sector. If I wanted to trade a long side trade, I think it would probably have to be Amazon. Off of like this 218 to like 220 level that can't get lost. So with the SPX 3 lower low accumulation happening in the election gap, I think with some reversion to the upside, we could get some really nice long side trades that I've had on my list. DAL is a trade that is absolutely insane in my opinion. Look at this weekly chart real quick. It's a flag breakout, really nice volume on that flag. And this is a very, very, very big time range that we're actually breaking through on some of the nicest volume that we've seen in a minute for DAL. We had a huge level over here previously, and then we got some high tight flags on the weekly on that area, and then we led into the report. We got a really nice reaction through that report. I don't know how the other airlines look, but they don't look bad at all. Like this one looks pretty good to me. A lot of these names look really, really good. There's DAL, AAL, there's LUV. You also just have the general sector ETF as well. LUV has its earnings still, but I think a lot of these names are really, really nice. Jets, that's the sector ETF for this one. I don't know. I really like where DAL is. So I'll probably look at this one as a side focus. It's not anything too nice. It's not anything too crazy. It's not anything that's that I'm gonna like put all my attention towards. LLY is another one. It's a healthcare name. These are pretty spready. We have gaps for the upside. We obviously had clear accumulation after this gap down on a recovery on the intraday session, and then it bled lower and it took out this weekly higher low. It put in a high volume tight spread weekly bar also beneath this low, right? And then they just kept accumulating beneath those lows, and now we're looking at potential weekly higher lows. So I really do like LLY. We filled the gaps on smaller time frames, and now we're basically just creeping through that trend line from the bottom of the gap being the base. And now basically I would just be looking for like 800 to be controlled or just this general breakout area to be controlled for a move back up to the upper extremes towards the 840s, 850s. I think that this could be a really, really nice trade for the future. So that'll be that. And that's basically all there is left. I don't think there's anything else that I really want to be trading. I think Netflix is a disgusting distribution. This is a parabolic three-step curve setup formation, kind of. and we're getting into the climax highs up here. And the preliminary distribution was shown on this candle on November 25th, right? And then as we moved our way higher, there's a weak volume bid, and then it started to obviously stall off of failing to base the previous highs, and we started to just get that reoccurring distribution that was kind of taking place up here on this exhaustion top, and that led to obviously a breakthrough all of this area, and a really disgusting day here on to end off the week, and the weekly chart doesn't really look too good. So major extended, majorly overextended in my opinion. I mean, I could see this thing coming all the way back down into like the low to mid 700s. I really could. Um, so that one is kind of hard to execute, but it's a decent looking name. I'm probably just going to be focusing long side on Amazon. Um, Sometimes I'll color code my watch list. Microsoft, we have a report at the end of January. The chart does not look good. None of mags really look good. So got to be very, very, very careful in this market is basically all I'm trying to say. I think I would probably rather be short on pops than long on drops, if that makes sense. So, um, yeah, that's all I'm really looking at. So if you guys have any questions, feel free to ask. But that would be the scan for this upcoming week. I don't think there's any other name that I really have too much interest in. If you guys go to the sectors, obviously there was no sector that's really anything that's stand out. We obviously have the XLE sector still trying to hold on. I'll have to check and see if XLE caught a bid over the weekend. We have that as a standout sector that's performing relatively well. I still think that there could be some trade opportunities and some energy names for sure. If we scan through some names, maybe we could find some more. But I think that's just Oxy still for me. I'm just gonna stick with my guns on what I've been correct about and what I think I'm still correct about. And then you go over to like some of these other sectors and they look terrible. Like XLF looks terrible. This is a beautiful short side trade. I've been talking about this one for weeks. The rollover from these highs was really nice. We had a huge gap. BLK, a lot of these different names had disgusting breakout failures above previous highs. Berkshire being one of these over here. We had some other ones. Where are the other ones? BLK. BLK was a disgusting one right here, right there. We had some other ones as well, and some of them are now just pushing into new highs and failing those new highs, right? So with the reports that are this week, there's so many critical earnings reports for the financial sector this week. If some of them are flat but look really bearish, like for example, Citibank flat but looks bearish, and it looks like we could be getting into a climax high in a UTAD, I could probably take a flush on this one to go test the gap on an intraday for an intraday trade. I think there's going to be some flush opportunities with how weak of a read, how weak of a chart there really is on this sector, and so many different names. And if the reports don't move it, then that could be a really nice trade. Every other sector is really tough to find direction on, to be honest. I mean, like industrials don't really look anything too good. A lot of the other names don't really look too good. A lot of the other sectors really don't look too good. LLY is a standout in the healthcare. PFE is a decent looking one if you guys go to the weekly or the monthly chart. Huge weekly support here that needs to be held. That could be a decent trade on smaller time frames into this week if it's ready to go. But like standout sectors would be like this one would be more of a standout sector to me as well. The airliners, like I go back to those. Really decent premium on these as well. Pretty cheap. I don't think you need to size a lot on those. And then everything else in terms of sectors like Nike, I'll be watching Nike, but that's more of a side focus on the spring for 2025. I want to see this thing get beneath these lows and then find a spring. And then we have gaps to target to the upside with really no seller anywhere throughout here. So I think something's still brewing here with Nike. and I think that could be a 2025 opportunity. But as of right now, the charts really don't look too clear or bullish or really too bearish. The risk reward is bad on both ends. So I want to see the NWOG. I want to see if we could get one. I want to see what data does. I want to tie all of my trades nicely into discounted ranges on either the call or put side, right? I don't want to short the whole. I don't want to long breakouts from the highs. I kind of want to trade cautiously at the lows and cautiously at the highs. So on each side for calls and puts, obviously. So yeah, that's basically all I'm really looking at, guys. It's an OPEX week. I'm probably just going to take 3-4 trades and call it. But those 3-4 trades I'll likely put some decent size on. So yep. If you guys have any questions, feel free to ask me. My list will change throughout the week, but yeah, that would be the what I'm looking at for the new week.